Price wars, cancellations, circuit breakers, halts, and stimulus. This is the Silver Reports Weekly Review, where we take a look at the headlines that move the markets during the week and all things investment related. On Monday, markets took another big dive, with the Dow closing down 213 points, the S&P closing down 225 points, and the Nasdaq closing down 624 points. Monday marked the biggest one-day points decline in the Dow's history, and it was the S&P 500's biggest percentage drop since December 2008. The story behind the massive drop in the markets could be set to oil and Italy. The story of oil started last Friday when Russia refused to go along with OPEC's proposal to cut oil production. In an effort to put pressure on Russia and recapture market share, Saudi Arabia cut its April official selling price to $8 per barrel. On Sunday evening, oil futures took a massive drop, which triggered a sell-off in the markets on Monday. In Italy, cases of the coronavirus jumped to 9,100 with 463 reported deaths, causing the Italian government to quarantine the northern part of the country. With the amount of cases reported, Italy became the European country with the most cases of coronavirus. With the markets processing so much pre-open, the S&P 500 tripped a circuit breaker 3 minutes after the market opened for trading. The first of three circuit breakers trips on a 7% decline, halting the markets to create liquidity. The markets rallied briefly, but eventually closed near the lows. On Tuesday, the markets had a big rally that put the Dow up 1,100 points, the S&P up 135 points, and the Nasdaq up 393 points. Investors were bullish off an idea President Trump floated to cut payroll taxes. The measure would put more money in consumers' pockets and hopefully stimulate consumer spending. President Trump also discussed providing aid to the airline and cruise industries and stated will help them through this patch. Oil prices also rebounded on Tuesday with a 10% gain on the day after closing down more than 20% the day before. Coachella and the Stagecoach music festivals were postponed due to the coronavirus. Coronavirus continued to spread through the U.S. with over 900 confirmed cases and 29 deaths. And then more news came out of Washington late on Tuesday, with the U.S. Commerce Department extending Huawei's license through May 15th. On Wednesday, markets gave back all the gains from Tuesday plus some. The Dow closed down 1,400 points, the S&P closed down 140 points, and the Nasdaq closed down 392 points. The Dow, which was now 20% off its all-time high, had entered bear market territory. COVID-19 fears continued to weigh on the markets, and the World Health Organization, deeming the coronavirus a pandemic, sent another negative jolt through the markets. Some analysts believe that the lack of action on fiscal stimulus by the Trump administration contributed to the market sell-off. The UK, on the other hand, announced a £30 billion strategy to combat the impact the coronavirus has had on their economy. In an interview with Yahoo Finance, travel data industry firm Forward Keys reported U.S. international flight bookings dropped 36.5% year over year for the periods from January 20th to March 8th. The company also reported to Yahoo that in the week of March 2nd, cancellations for international flights departing from the U.S. outpaced bookings for the week. That added more context to the sell-off we've all seen in airline stocks. The NCAA made a decision on March Madness on Wednesday, deciding to allow March Madness games to be played but without fans in attendance. In other news, PepsiCo agreed to buy energy drink maker Rockstar for $3.8 billion. I can only assume that Pepsi's Mountain Dew Kickstart, Game Fuel, and Amp Drink weren't grabbing the share of the energy drink market that they hoped for, which resulted in the purchase of Rockstar. On Thursday, markets continued to slide, the Dow closing down 2,300 points, the S&P closing down 260 points, and the Nasdaq closing down 750 points. Thursday marked the largest percentage decline for the S&P 500 since the Black Monday crash of 1987. The massive sell-off caused another halt in the markets after tripping a circuit breaker, the second one this week. Thursday's sell-off can be attributed to President Trump's announcement late Wednesday evening that the U.S. would suspend travel from certain parts of Europe to the U.S. for the next 30 days. He also announced $50 billion of low-interest loans for affected businesses and suggested a delay in the April 15th tax filing deadline. The Federal Reserve tried to ease the fears of investors and the public by announcing a $500 billion repurchase program to infuse the economy with capital. On Wednesday, the NCAA wanted the games but not the fans. On Thursday, they canceled the tournament altogether. This was after the SEC and other conferences canceled their conference tournaments. Also, the NBA and NHL postponed their season, and Major League Baseball delayed opening day by at least 2 weeks. Disney announced it's closing Disneyland until the end of the month. This was in addition to the closed Disney parks in Shanghai, Hong Kong, and Tokyo. Disney reported it could lose $280 million in revenue due to closures in Shanghai and Hong Kong alone. Thursday was also a big day for earnings. Many names that usually make headlines and move markets reported on Thursday. Slack reported they lost 4 cents a share, which beat estimates by 2 cents, and the company also reported a revenue beat by $7.6 million. Slack grew revenue 49% year over year and calculated billing by 37% year over year. Paid customers also increased to 110,000, but the stock fell 19% in after-hours trading after their report. Adobe Systems reported an EPS beat by 4 cents and a revenue beat by $40 million. The company saw a 22% year-over-year increase in digital media revenue and a 15% year-over-year increase in digital experience revenue. Oracle reported an EPS beat by a penny and a revenue beat by $50 million. Oracle saw a 2% year-over-year increase in revenue. Broadcom missed EPS earnings by 11 cents and revenue estimates by $130 million. Inovio Pharmaceutical, which has made headlines recently because its potential to produce a coronavirus vaccine, reported revenue of $300,000 and a net loss of $37 million. The Gap reported a strong quarter with $4.6 billion in revenue, a beat by $110 million, and an EPS beat by 17 cents. Dollar General reported a revenue beat by $20 million and an EPS beat by 9 cents, and the company reported an increase in same-store sales by 3.2%. And Ulta Beauty reported an EPS beat by 10 cents and a revenue beat by $20 million for the quarter. On Friday, the markets bounced back in a big way after President Trump declared a national emergency because of the spread of the coronavirus. The Dow closed up 1,900 points, the S&P closed up 230 points, and the Nasdaq closed up 673 points. The declaration of a national emergency frees up $50 billion in federal aid to fight the effects of the coronavirus. Google's stock price saw a 9% gain on Friday after President Trump advised that the company would create a website to help determine whether individuals need a coronavirus test or not. In other news, Canadian weed producer Tilray saw its stock drop 32% on the day after the company did a secondary offering, where they priced their new shares at $4.76, well below the $17 per share IPO price from 2018. Overall, the Dow, S&P 500, and the Nasdaq closed down on the week. Last week, the markets ended with a rally on Friday. It'll be interesting to see if this rally can carry over to next Monday. In crypto news, the digital currencies we follow had a tough week. Bitcoin lost 43% of its value from last week and was trading at $5,120. Ethereum fell almost 49% and finished our week at $122.63. Litecoin dropped 44% on the week and was trading at $34.77. And Ripple was trading at 14 cents to end the week. Crude oil closed the week out at $33.27 per barrel, down almost 20% from last week's closing price. A big winner for the week was Cypress Semiconductors, which jumped 41% on the week after the $8.7 billion acquisition by Infineon was approved by the Committee of Foreign Investment. A big loser for the week was Asbury Automotive Group, which lost 36.6% of its value on the week. That's a wrap for this week's market review. If you want to dig deeper into the headlines we covered, the links to the full stories are in the description below, and the link to sign up to our weekend article in Focus is also in the description below. If you're ready to get serious about investing and creating wealth for yourself and your family, check out our latest quarterly newsletter, The Civil Report. Serious investment ideas presented in a way that experienced and novice investors can understand. If you're ready to master the markets, check out our newsletter at civilreport.com. Thanks again for checking out the Civil Report's market review. This channel is dedicated to anyone who wants to start investing but doesn't know how or where to start. If you have any questions, ask in the comments section, like and subscribe, and may your next investment be your best investment. See you next week.